Hey fellow traders, it's time to discover some truths about stop loss. What is the truth about stop loss and what's your feeling on stop loss in trading? Do you think there should be a stop loss in trading? What do you do? And what's your preference? Put it in the comments and let me know, because there's a lot of controversy surrounding the issue of stop loss. And while some fellow traders say we should definitely stop loss, other fellow traders say it's irrelevant and you should never stop loss and you should average down, and so on and so on and so on. Well, this is what happens when you average down, by the way. So just so you know, this is better when you stop loss. My opinion is you should always stop loss. All you got to do is you got to take the 4 hour and put it on a day chart. This is the DAX, by the way, Germany 40. So now you've got it on the day chart, right? On the day chart, put it on a line chart and have a look at what you got here. It's easier to see the points on the line chart. Then all you got to do, we draw blocks in because straight lines are very, very accurate, and you're expecting a price to bounce off an exact line. I don't know, give it a block, give it a bit of space, right? So what I normally do is I'll draw it off this area. So I'm just looking at this and thinking, okay, there's 1, 2, 3. You've got to have 3 points, you've got to have 3 touches, right? So those are your 3 touches. That looks like a really good, reasonable support area now. We call it support because it's at the bottom. We call it resistance when it's at the top. Don't draw millions and millions of lines on your chart. I've seen many a trader teaching people to draw like 400 lines and resistance lines and crap all over their chart. You're going to get confused. Keep it simple. Keep it as simple as possible. 2 blockies is the best. 1 at the bottom, 1 at the top. That's always good. You can put a third one in just to like remind yourself of a supply area or something like that, but try and keep it simple, right? Now what you do is you put it back to the candles, because the candles, what the candles do is they tell you there's a bullish momentum or there's a bearish momentum. The tails will tell you that the sellers are getting out or the buyers are getting out because there's a long tail. You know, the undecided ones and all these different little things. And you can also pick up the double tops, the double bottoms, all these nice little things from the candles. So keep an eye on the candles, because one of the big things with the candles as well is, for example, if you look at this, 3 big moves like that actually gives you a nice demand area down there. So, you know, if you get 3 big red ones down, that gives you a kind of a supply area. So, you know, you look at it and you think it actually falls into place as well, falls nicely into place here, right? Now what you do is you take it back down to the 4 hour or the 1 hour or whichever time frame you want to trade on. All I say is take your levels from a higher time level because they're more accurate. I particularly like to take the day level because it's very, very accurate in comparison, and then I can trade on the 4 hour or the 1 hour, the 15 minute, the 30 minute, whichever I feel like. Okay, so let's have a look at this now. So now you've got this coming down into this support area quite nicely. Okay, as we saw earlier, it's already the trade we were looking at earlier. Now what you do is you look at this and you say, well, it needs to come down, at least down into the area, right? Somewhere down here at the 164.50, 164.70 area. We're at 165 now. So your idea is it's going to come into here and then it's going to turn, go up and give you a nice big green bar somewhere here, confirming that it's going back up. And the reason I'm looking at a long trade is because if you look at the overall picture, the trend is up and the trend is your friend. It's going up. This could be considered a rather large flag pattern, and they normally continue on upwards. That said, we could have a double top and this could be crashing back down. And if in that event it does that, and it's not to say that it won't, then what will happen is this will break through here. We'll break through this level, come back up, and you'll get a red bar confirming down and goes crashing down. It will always, it'll come through, it'll go back up, and then it'll go down. Okay, that'll be your nice red bar going down. Nothing can predict the future, remember. So while we're looking for a long trade, this trade could also go short. Well, these things are not set in stone. These are things that can happen. We don't know what the future is here. I'm not like other people who teach you and go back on the chart and do a reconstruction of the whole chart, and we know what's going to happen next. We really don't know what's going to happen next year. If we take this long trade when it's ready, we don't know if it's going to succeed. All we can do is pretty much put a trade in when it's ready, put a profit level target at about 170, and we're going to put a stop loss below that low over there. In fact, a little bit into the middle of that big green bar over here, so it's below this lot. That gives you a clear area to work in so that if it pops down. But my kind of way of trading is if this starts messing around down here, I'm out, because my trade has invalidated. I would not take that trade long if it was trading somewhere in this area, because it's gone. So I'll probably get out long before it reaches the stop loss, taking a small loss and waiting for my next trade. But if it goes long, I'll actually add to the trade in these areas because I expect it'll go quite high. Now, why is that my opinion? Well, it's pretty simple, really. I've seen so many traders that don't have a stop loss blow accounts. I've seen so many traders never become profitable because they don't have a stop loss. And the main reason for that is because you're chasing a strategy, or you're chasing a system. You're actually not using stop loss to your advantage. Because what you should be doing, as you know, to make a profit, is you should be taking smaller losses and making bigger wins on your profits. And that's how you make a profit in trading, not by following a system. Systems don't make you money. Stop loss strategy makes you money. Losing less than what you win makes you money. It's a bit like a coin flip. It is a coin flip at the end of the day. Why do I refer to it as a coin flip? Well, if you were to take 10 coin flips, would you agree with me that if you chose heads rather than tails, that you'd probably win 5 times and you'd probably lose 5 times? And that's generally how it works. But the big thing is, if I was to tell you on that coin flip, let's say the coin flip was a 5 Rand coin. Let's say I said to you, every time you lose, you're going to lose that 5 Rand coin. But every time you win, I'm going to give you 2 times that. I'm going to give you 10 Rand for every win. Anyone would take that bet. Absolutely anyone that I know would most likely take that bet. Because that is probably one of the best bets you're ever going to get anywhere in the world. Right? And it's the same as trading, because trading is a 50-50 game. 50% of the trades that you take, you're going to win, and 50% of the trades that you take are probably going to lose. 9 times out of 10. It could even be worse on the loss side. But the thing to win is to take small losses and to make big wins, and thus stop loss becomes really important. So the thing is, the reason you need a stop loss is trading is risky. We all know that trading is risky. 80% of traders lose money. And if you don't like losing money, you probably shouldn't be trading. Guys, do me a favor. Go and get your free Forex book in my secret blog, and go and get your free trade there every day. It's just a trading idea. It's not trading advice. Look in the description in the bio. Go check out the blog. Get your free trade every day. It's just an idea. It helps people, because it's always nice to know what somebody else is doing. Don't forget to pick up your free Forex book. It is in the index. It is in the side. But I think it might also be in the description here. Just check it out. Go and have a look for yourself. It's free. It's for you. Guys, stop loss is important. If you don't have a stop loss in trading, you are most likely going to lose, and you're most likely going to blow your account. It's really important that you keep a stop loss. Now, normally most traders will say on a stop loss or a win ratio, we'll do a 2-to-1. I actually often will trade on a 1-to-1. I'm not too worried about that. I'll take a 1-to-1 risk. I don't mind. If it starts losing, it's invalidating. If my trade is invalid, I'll simply get out, and I probably won't even reach that 1-to-1 anyway. The only reason I put the stop loss at a 1-to-1 on some cases is if I go out shopping and I come back and the trade's taken out well, at least I had a stop loss. It's a question of if you break even in this game in your first few months of trading, you have done incredibly well. You've actually had a very, 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 very good run. So believe me when I say to you that trading is not as easy as people make it out to be. There's traders out there saying, in 90 days you'll be a millionaire, or turn $100 into $100,000 in a week or a month, or whatever the case. They're all lying to you. It's all BS. It's not going to happen. You've got to take this slowly. You've got to work your way into it. So guys, my opinion, you need a stop loss. What's your opinion? Let me know in the comments. Tell me, do you think a stop loss is important or not? It would be interesting to know. Thanks for watching. I hope this video gives you some insight, and well, it lets you know what I think anyway, at least. Till next time, guys, thanks for watching. Don't forget to watch the last video, and bye.